Welcome back. You're watching Business Morning on Channels Television. We're taking a look now at the commodities market. And Okweyemi Oguntade, a research analyst with the Economic Unit at Financial Derivatives Company Limited, joins me now on the program. Hello, Okweyemi. Thank you so much for coming in. Oil prices have continued to show lackluster returns. Oil prices this morning are trading at $48.73 a barrel, and year to date is also not looking too encouraging. Year to date is down about 13.63%. What's actually going on? I know we've had this conversation. It seems as if we keep repeating ourselves, but looking at the developments now, one would have expected that there'll be a little bit of relief.
Yes, we should have expected a little bit of relief, frankly, but what we are seeing going on in China, Chinese data came out of recent, and they actually had a slowdown to 6.9%, and although it's above what most analysts expected, they actually expected them to go slower than that. But it was a 6.9% growth rate for the third quarter of 2015. And then it makes people wonder, is China going to be able to achieve its growth target of about 7% for this year? And we know that China is a major, a major importer of most commodities within the market. 12% of world oil goes to China. So, when you have a report like that, this contributed to the negative sentiments within the markets, which, led to the decline in crude oil prices. But if you're looking at the supply side, yes, the global glut persists, and if you're looking at the oil giant, Saudi Arabia, for instance, things are not looking too good for Saudi Arabia at this point. It seems like the heat of the oversupply within the market is getting to Saudi Arabia. For the first time since 2009, Saudi Arabia is actually going into a government deficit of about 2%. Debt to GDP is 2%. And then you also have the fact that production levels have actually been declining, that they've maintained or sustained a decline from June right up to September. As at June, it was 10.56 million barrels, and as at September, it was 10.23. And you're wondering, if you're having a sustained decline right from June to September, does that mean production levels are going to keep coming down? So this is kind of making most traders think maybe the supply glut is gradually coming to an end. But if you look at Iran as well, Iran has finally settled its deal with the world powers, so to speak, and it's going to push out its oil into the market sooner rather than later. And so, which means the oil glut isn't going anywhere. And then you have Middle Eastern countries offering discounts for their oil products. So this is kind of leading us to think, okay, demand side is not looking so good. Supply side is kind of mixed. You have Saudi Arabia having issues, and then you have other Middle Eastern countries
like Iran and the rest of it.
So for the energy market right now, it's kind of a mixed. It's kind of a mixed feeling right there. We can't really tell what direction it's heading towards, but the supply glut still remains. Yeah,
because we also noticed that OPEC exceeded its official production target.
Yes, for 16 consecutive months. So on the supply side, it's still looking, but when you're looking at Saudi Arabia, things are not looking too good for Saudi Arabia. Okay,
let's talk a little bit about the agri-commodities, and let's bring it back home. We noticed that cassava, which is gari, maize, and flour, the prices have been fluctuating, kind of. We've noticed that even from the last figures that you guys sent in from the FDC, we didn't see gari at 10,000 naira for 50 kilograms. So prices domestically are also looking kind of, demand and supply is actually very strong.
Yeah, at the end of the day, what drives the movement in this price is the forces of demand and supply. And then for the changes you're seeing in gari, the reason why we had such a significant change is because we changed the variable that we're tracking. Now we changed it to Ijebu gari, which is the most expensive.
Ijebu gari is the most expensive
gari. It's the most expensive gari in the market right now, and so that's why you're seeing about 10,000 naira there. So yeah,
that's for Lagos actually.
Yeah, for Lagos.
And then in Kano, they don't consume so much of Ijebu gari, so we see it at 8,000 naira.
Yes.
And in Onisha, it's 4,000 naira.
Yes.
But then the price of maize in Onisha, for instance, is 2,700 for a 50-kilogram bag, but here in Lagos it's 2,500.
When you consider the cost of transportation as well, you have to factor in the cost of transportation of all these commodities to all these regions. And once you put that in, you begin to see reason why prices are differing in some certain states compared to other states. Because when you look at the distance from a particular point to another point, you would know that, you know, transporting maize, say from Ibadan to the east is obviously of a longer distance than from Ibadan to Lagos here within the west. So this is contributing to the price differentials you're seeing there.
Is that the same also for the price of cement? Because for Lagos, we see it, a 50-kilogram bag of cement that's 1,007, but in Kano is 1,500.
Yes, that's the same reason as well. You have transport costs differing across, you know, different states.
Okay, so but what's your outlook for the rest of the week?
My outlook for the rest of the week, I expect domestic commodity prices to remain fairly stable at the same level. But for the global commodities, I expect all prices to continue to go down for the rest of the week. And for sugar prices, I expect it to continue going up as a result of, you know, the El Nino weather patterns we're seeing affecting major growing regions, Brazil and India. For cocoa, most traders are concerned about dry weather patterns we're seeing in Ivory Coast, and so this is contributing to the upsurge we're seeing in prices for cocoa. So cocoa prices are likely to continue trending upwards for the rest of the week.
Well, Opeyemi Oguntade, thank you so much for coming on the program this morning.
Thank you for having me.